Alright, ICT traders, welcome back to the channel. So yesterday was a blue day for me because I took two different trades on GBP USD, Euro USD, and they all went in my favor. What I want to do in this video is to actually explain every single step I went through before taking that trade, why I took the trade, and the kind of entry model I use. So I basically use this entry model called gauging momentum. I shared this video I think 2 days or 3 days ago, very explicitly. I explain it in detail in that particular video. This is the video where I said never trust an order block, do this instead. Watch that video if you want to get more on that. So let me show you how to gauge the momentum and how to get an entry using this kind of pattern. So look at this. This was GBP USD, the 15-minute time frame. What I saw was that there was a sudden impulse swing right there where there is a shifting market structure right above here. All right. This is a market structure shift right here. I didn't use this place as a market structure shift because I don't consider this place as lower high, knowing that I need at least 3 candles to print above each other. What that means is that you want to see price. You see this candle close here. All right, a bullish candle close there and another one close here. Did you see any candle close above the closing of this one? No. So that is simply what I mean by 3 candle closing above each other. I need to see 3. 2 is not a valid retracement for me. So this entire movement is just one movement for me. I hope that is explanatory enough. So the next thing is that I saw a market structure shift from this downtrend. Beautiful. What I saw again was that I saw a very visible mitigation block. Mitigation block is this kind of pattern. I've explained this time and again, where you see price having a failure swing and then taking up, coming down, and then going up. This was the entry formation I saw yesterday. So I was expecting price to come and retest the bullish mitigation block. But coming down here, I want to gauge the momentum of this retracement. All right, that is where the gauging momentum principle comes in very handy. All right, you do that so you will know exactly how to take your trade. So I just decided to go down to the 1 minute time frame. 1 minute time frame was what I used to gauge the momentum. So let me show you that, please. All right, this is it. Remember I said from the first place where price starts going down, and you must not leave your premium and discount out of position. So from here to here, once I saw price came into the discount area, I started gauging momentum. All right, I started gauging momentum. You want to just make sure that the strength of price coming down, I think the premium area was above here, the discount was down here. So the first push was from here to here. I want to know if the strength of these guys is big or is reducing or is increasing. All right, I saw that movement, and then the second push was from here to here. You're going to see how the strength of the push is reducing as price is breaking structure to the downside. Break of structure here, another break of structure here. Every time price pushes, it breaks structure. So in such kind of movement, what you do is you pay attention to the lower high. As soon as price close above your lower high, you have shifted structure. So I kept watching it. Price is coming to my mitigation block. That was where the point of interest is. As it is coming down, it is reducing momentum right here. I saw this moving down. So you can see this is bigger than this is bigger than this. And then it did the last push. This was the last push. All right. Even though this was big, what I saw was a quick rejection of price from there. Let me show you. Can you see what I saw? So I saw price overtaking this guy. This was what gave me the confidence, overtaking this guy. So this was where the shift in market structure came in handy. So I was gauging the momentum. I was seeing reduction as it is coming closer. The energy is going down. getting lower, getting lower, getting lower. Then it did its last push into the point of interest, and then the next one will always be more than the last one. All right, in the opposite way. Notice how the movement in this push is smaller, but this one is so big that it overtook almost every momentum of the movement right here. All right, so this was what gave me the confidence that price was about to start going up. So once I saw this, and it was in the 1 minute time frame, touching the mitigation block area, the point of interest, I just decided to kick from there. When I saw these ones, you see, there are so many dynamics of entry using ICT concept. All right, so when I saw this shift in market structure, and close to that shift in market structure, there is this energy pushing it. Can you see this wick? Price will come here and it will push. Price will come here and it will push. I now started getting some sense that this place is going to quickly reject price. And that was when I updated the community in the Telegram group. If you are not in the Telegram community, check the description of this video and you will be there. All right, so I use this indicator called volume to check if that movement is really strong, and you can actually see it. All right, can you see the last retracement? Notice how the last retracement has a very small volume, even though it has a very big push. Notice how it has a very small volume, these red candles, compared to the one that pushes the price up. Can you see? It is very big. And volume is one of the indicators that give you the best kind of price momentum. All right, so once I saw that, I said, wow, I want to go into this trade. And that was when I took the trade on that area. All right, exactly at that point I was willing to risk it all, and it actually went in my direction. Let me remove all drawings. All right, it actually went in my direction, gave me almost 42 pips, I guess. All right, the first trade gave me 21 pips. So that was what happened yesterday with this entry. Gauging the momentum using the volume. Notice how the volume is reducing as it is coming down. This volume is, you can see, reducing. This volume, the downward indicator displays. I normally use the same color for my volume because I don't want to see which one is coming down. I just want to see where the energy is. All right. So if this is the average volume, let's say this is the average here, anything above this line means a heavy volume. So look at this. Can you see this push down? And you check the volume, it tells you that it is strong. Can you see this? Check the volume, it tells you it is strong. And look at the retracement. The retracement volume is smaller. Every time this pushes, it is bigger than the retracement. It is only at this point that the volume for the push up increased. And it is telling you that there is a momentum from the bigger boys. And that was when I took the trade. I hope this video is explanatory enough, guys. Give me a like for this video if you love it, and make sure you subscribe to this YouTube channel, and let me know if you have any question. Thank you guys for watching. See you in my next video.